Hello and welcome to another video for myatmm.com. It's time to look for some transactions to track or some new positions to get into, so let's get right to it. Here we are once again in Schwab's Thinkorswim application. We're logged into our paper trading account and we are reviewing what happened to Bath & Body Works, the put option and the call option that we sold last week. So let's go over to the monitor tab, the account statement for BBWI, the transactions that happened. So as you can see, we placed the orders. Let's look at here. So we placed the orders last March 4th. That should be last Sunday. Sorry. Okay, yeah, last Sunday was March 3rd. So here's where we placed them. All right, so we placed the covered call, strike 47, limit of 55. When it was filled, it looks like, yep, right here to 47 call. So we placed it for a limit of 55. We actually got 73 for it. And then it looks like I had to adjust. Okay, so we had placed a 46 put, or a 45 put, my bad. 45 put, and I had to cancel it because I think the price moved on the next morning. So I had to change it on the day of. You can see that's 14 minutes after the market opened, and I had to adjust it to a 46 strike and a limit of 60, and then it got filled right here. 46 put, it got filled at 72, so we still got the 72, but we did have to go up $1. So we were playing a 46 put and a 47 covered call on it. And here's where those transactions executed, and you can see the details about how much we received, the commissions, and things like that. So let's go over to the application, the web application first, to track these transactions. Here we are at the website, myatmm.com. We already logged in, so we're sitting on the dashboard. We need to go over to the cost basis screen and make sure BBWI is selected. It happens to be the first one on the list, so it's already selected. And as you can see, we already have the stock positions from last time of the 100, and there are no puts and no calls yet because we need to log those transactions. So let's go ahead and get those up on the screen so we can start doing that. All right, so now we have the Thinkorswim transactions up on the screen so we can see what we're doing. We need to create 2 new positions, and you can actually go ahead and just, create them and put them in the draft positions from, so we can edit it quickly. All right, so the start date for these was last Monday, which was the 4th. Let's get rid of that. So let's look. Yeah, so last Monday was the 4th, so that's when the position started. So let's go ahead and change that, and I don't know why I just didn't use this calendar, but in any case. All right, so they were both sell to opens. Both of them are sell to opens. One was a put, and the other one was a call. And both of them were one contract. The expirations on both of them, well, the call was March 8th, and then the put was March 8th as well. So the strike on the put was 46, and we got 72 for that. All right, and the strike on the call was 47, and we got 73 for that. All right, so what's going to happen is I'm going to click save, and when I click save, it's going to move the put into this put section, and when I click save on the call, it's going to move it into the call section. All right, so go ahead and click save there, and click save here, and as you can see, it moved them into the respective sections. I'm going to go ahead and collapse the stocks because we don't need to look at that right now, and it'll just remove from the confusion of it possibly. All right, so we can see we got the cash secured put position right here and the covered call right here. But before we do anything further with these, we need to go ahead and make sure we add these to the permanent transaction history. You can see it's already added it to the temporary work area, the proposed record section. And something else I want to show you after this, as you can see, the commissions and fees are not populated right now. But something you can do in here is, I'm going to open this up in a new tab so I can show you what to do here. But you can go into your preferences section and actually right here, the sell to open commissions, you can actually set a 65-cent commission and a 1 cent fee in here. So I'm actually going to go ahead and do that, and the next time we come in here, you'll see that those will automatically populate. So just do that, and let's go ahead and click save, and then they're saved successful. And you can also see there's a bunch of other ones that are defaults that you can set for things. Like over on Tastyworks, it has an exercise or an assignment fee that it charges you. I believe it's like $5, but in any case, you can set some defaults up in here for you, so when these are populated in here, it'll pre-populate with those amounts here, so you don't have to key them in manually. All right, so the commissions and fees for both of these was 65 cents for the commission and 2 cents for the fee. 65, 2 cents. All right, and I'm going to go ahead and move this one down. So it pre-calculated the credit minus the commission and fees. Go ahead and click save on that, and then do the other one and click save. So now both of those are logged into the permanent history, transaction history of this stock symbol. And you can see overall we've collected $605.31 thus far. All right, now we also need to track. You can see right here. Yep. Okay. So these are the two positions. Well, what happened, this past Friday? Where did the stock price move to? As you can see, the last track price was $44.76, and that is below the covered call. So this one, the covered call, expired worthless. So we can go ahead and delete that because that's no longer in play. And then $44.76 is below the $46 strike of our put. So this one got assigned, which is why over here in Thinkorswim you can see that transaction of $4,600 here. So we actually purchased or got assigned this cash secured put. All right. Something to note here before I start adding this and assigning it and things like this in the software is I want you to make note is our cost basis currently is $47 before this $46 strike purchase. After we commit this, it's going to lower our cost basis, probably, I guess, down to $46.50 or something like that. And then all this will adjust. So let me go ahead and do that. So in the software, you can click here, do assigned, and it is a buy to open. It is stock. It's 100 shares. And the assignment date, I'm just going to use the same date that's in Thinkorswim, so it's March 9th. So I'm just going to change that to March 9th. And the assignment price is 46. So that'll be $4,600. When I click submit here, it should add a record right up here into the stocks of 100. And it did. Okay, so now this put transaction is complete. We no longer need it. I don't delete it by default because I just want to make sure that everything looks accurate on the screen beforehand, and then you as the user can go ahead and delete it manually yourself. Also, when this added this record, it did not add the proposed record down here. I only add to the proposed records when you click save. You'll notice that it did add it for that original put from last week, but we can just ignore that for now. But we do want to go ahead and click save here so we can get the proposed record come here. By the way, you can click this and it just generates the proposed record. It doesn't actually save or commit anything to history. So as you can see, I added it again and it just created another record. But these are just temporary records, so you can do it as many times as you want. It's not going to hurt anything. It only matters when you move it down to the permanent transaction history. All right. Again, like I said, this proposed record is just a helper area. It's just temporary. It's only just a work area. Okay, so the assignment cost us $4,600, and as you can see, there's no commissions, no fees. So all we have to do is move down one of these, and you can see it puts it in there, sets the stock flag for you, and then we click save, and then it adds it to the permanent transaction history. All right, now when we scroll back up to the top, you can see we have the two positions here still, like we did before, and it has adjusted our summary up here. We now own 200 shares. Our total cost into this position is $9,300. The current stock value is $89.52. We have an unrealized loss of $348. And total, we currently have no collateral, no shares from puts or anything going on just yet. Our total premium that we've collected is $605.31 still. So now we can look, see the cost basis has adjusted down to $46.50. It's no longer to $47. And you can see what our cost basis with the premium. So after it basically includes this premium into the overall calculation, that puts our cost basis at $43.47. So we are still a little lower than what the current price is. So we are net positive still if we were to liquidate. All right. So the cost basis of puts, $46.50. There's no puts right now. That's kind of like a preemptive calculation that I do. So you can put like a position, like we're going to look for a cash secured put right now, probably around the $44 area. And once you add that transaction in here, it will adjust the cost basis as if that one gets assigned as well. I guess I'll probably have to show that next week after we add another cash secured put position in here. I'll try and remember to do that. All right, so where are we at? We need to basically go look for another covered call position and another cash secured put position, another cash secured put position in Thinkorswim, and go ahead and get those queued up. And this time around, we can do 200 shares on the covered call. And as long as we stay at $46.50 or above our cost basis, basically, we will break even on the stock itself so we can keep all of the premiums that we've collected. So let's go do that right now. All right, so here we are back in Thinkorswim, and you can see we have the cost basis and the cost basis of the premium up in the top right-hand corner of the screen. We need to go over to the Analyze tab, make sure BBWI, the symbol that we're working with, is selected in here, which it is. We're looking for this coming Friday, and let's go ahead and do the covered call first. So we will be over here on the call side, the left-hand side of the screen, and our cost basis, as you can see, is $46.50. We don't want to do it at 46. We want to do it 47 because we want to make sure we just keep it at or above our cost basis, so we will break even. Now, thing about now, since we're at $46.50, if the 47 was to execute, we would have 50 cents in capital gains per share doing it this way, but that's only because there's no $46.50 strike. And I don't want to do it 46 and take a 50 cent loss. Granted, you could, because we've already collected so much premium on this. If you were just trying to avoid capital gains that way, that would be one way to do it. You would have a loss in that instance. But in any case, it would wash out with the premium that you've collected anyway, because I'm pretty sure that's all as short-term anyway, classified as short-term. All right, so 47, I always like to stay above. I don't like to take losses if I can avoid it. All right, 47 strike puts us right here, but we can only collect 15 cent premium, which obviously is not that much. Let's go out a couple weeks and see if that number changes a great deal. All right, so 47 here puts us at 45. That's just at 1%. So I do like that number better. And the spread, see, there's a spread here is 20 cents. So technically, I guess you could get 25, but again, 25 cents is still lower. Let's look here. So 47, 3 weeks out is 60 cents. All right. Here's the thing. Under normal circumstances, like if I was trading this live myself, with real money, I probably would look to do the covered call right out here at the strike of 47, because it's only 2 weeks out, so only 12 days till I get that 1%, because I guess right here, so 15, so if I was to be able to do 25 times 2, that would be the same thing, worked out over 2 weeks instead of 1 week. But for this paper trading count, to keep the demo and the transactions and keep on continually creating the videos to show you how to use the application with tracking transactions, I'm going to go ahead and just stick with just a week out if I can make some money. And it looks like we can make some money here, even with the covered call. And we are going to be doing the cash secured put on the other side. So let's stick with that plan. So we're going to go ahead and collapse these two. I'm going to go ahead and left click right here. And it looks like there's a bunch of stuff down here. Hold on. So let me it's been adding when I've been clicking around accidentally. Okay, so 47 strike. We're going to left click right here, which will add a record down here for the covered call. And we want to adjust it because, again, the spread is 15 to 35 cents, so that's a 20-cent spread. So let's go ahead and up it 10 cents. We should be able to get in the middle of the spread. And one thing to note is we have 200 shares, so we can actually do 2 contracts. So we adjust that to 2 contracts. Right click here, confirm and send. And we'll collect the $50 minus the fee or the commission. Go ahead and send. So that'll queue up that order. So that should work for us the next day. Now we want to look for a cash secured put to do, because again, I like to play both sides, and I like to play both sides as close to at the money as possible. All right, let's see here. So we're going to left click right here on the 44, and the spread is 50 to 60, so that's 10 cents. So we should be able to get a nickel more, and we only want to do 1 contract. So right click, confirm and send. Go ahead and send that off. All right, so now those orders are both queued. We have 2 contracts for the covered call queued, and we have 1 contract for the cash secured put. So again, we're playing both sides, and we are kind of, if BBWI continues a downward trend, we will kind of be riding it down, continuing to play both sides. And every single time a cash secured put gets exercised, meaning if it continues to go down in stock value, then we will continue to dollar cost average and pull the cost basis down as well. And in a live account, I usually roll these as often as I can for as long as I can, and then only allow them to exercise when I can't pull at least 1% premium within 30 days or less, and then I'll finally let them get assigned. Usually by then the stock prices come down significantly or enough to where there's no more premium at that higher price. So I will go ahead and buy them then, because then I can sell the covered call on them and then collect more premium on the cash secured put side. And if those exercise, the dollar amount is low enough to where it pulls the cost basis down to a significant amount. So anyway, I'm trying not to make that sound confusing, but I think it came out a little confusing. But in any case, so we will see how these positions, the queued orders, execute and cover them next week. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.